I'm good. I am so excited to get to talk with you, reading your bio and your stories and your website. And you're in Boulder. I'm up right west of Fort Collins,
Okay.
so we're kind of in the neighborhood of each other. You have a house full of kids. I have a house full of animals. So who knows what's going to go walking past. But I thought we could start, just reading like that you have been with Techstars doing the job that you've done for many years, kind of get your story of the story of your journey
Yeah.
and really how you
I
started
mean, it starts
and where you're
before
going.
Techstars, but I was in college looking at my student loan bill and realizing that I was going to be spending the rest of my life paying my student loans off if I didn't do something drastically different. And ended up starting a company with my father and kind of got the entrepreneurial bug then. Um, and have been sort of working on early stage companies and mentoring early stage companies ever since. So the company that I started with my dad was I think we started that company in like 1998 maybe, and it was an online retailer for the property management industry. It was e-commerce, but at the time the word e-commerce didn't exist. And so I had to build our own database driven website and figure out how to process credit cards. And I was doing it all. I was just hacking it all together as young and, naive college students will do, and just learned a lot in the process and sort of became fascinated by the concept of mentorship in general because my father was there and he was helping me think about it. My dad's an entrepreneur. His father was an entrepreneur. So kind of became fascinated with this concept of mentorship and how mentors can really help accelerate learning and growth. And like I said, I've been sort of mentoring early stage companies ever since. I joined Techstars, not quite day one, but pretty close to the beginning. I had David Cohen, when he had the idea for Techstars, came and pitched it to me and a colleague. I think it was in like 2005, maybe, or 2006 when he did that. And he started the first accelerator program in 2007. And then I joined in late 2008 as a mentor and a person to like just help figure out what we do with the energy that was in the community around helping entrepreneurs succeed. So since I joined, there were 20 companies in the Techstars portfolio, and we have over 2,200 now.
Wow.
And just learning how to help startups at scale and manage a portfolio of that many companies at scale and deploy capital into companies at scale. And it's very different than what it looked like in the early days, but I don't know. I think that's part of all of our journeys is sort of adapting to the growth of what's around us. So it's been a really crazy ride.
It is crazy. And I spent a few weeks, I don't know, it was maybe 7 or 8 years ago at Techstars in Boulder. And, just I was writing story for when I was working with Entrepreneur. And it is hard to put into words and, that experience of being around all of that creativity. And when I was there working on the story, and I'll make this a really quick little short thing here. There was a couple of kids, right? They're all young in Techstars, and they had invented smartphone controlled robot balls, right? Like they controlled with the phone. And so there's robot balls, Sphero, right?
Yeah,
Yeah, so they made BB-8. But when I was there, I'm like, what in the world are they going to do with these robot balls? But they went on to do these great things, and there's drones flying around, and it's just, I think that, for our international audience who is not as intimate with Techstars, if you could maybe walk through, it is magical from a startup perspective, from an investment perspective, from a diversity perspective. Techstars is really special. So talk us through like what it's like to be around all of that invention and innovation.
I could take that question so many different directions. Of course how it feels to be around that creation and energy is it's very invigorating and it's very refreshing. It can also be very heartbreaking.
Yeah.
Right. And part of it is helping channel that creativity I mean, when you're dealing with startups and you're dealing with entrepreneurs, you have to channel that creativity into a business that will work. And so it isn't always just about pure creativity. And that's sometimes where entrepreneurship can go sideways, where
Right,
entrepreneurs come up with these great ideas and like we can solve all these problems and we're going to change the world. But at the end of the day, there isn't a viable business model on the other end of it. And so that's what differs an entrepreneur from an artist. And that alone, that is the only real difference between an entrepreneur and an artist. Um, and maybe not even then, right? Because artists, at the end of the day, they need to put food on their tables too. And so they have to be able to make things that people will eventually buy, hopefully in their lifetime. But, I think that trying to help those entrepreneurs really channel that creative energy into what will people pay for here? What can you make money doing? And not that the focus not that you're an entrepreneur because you have to make money, but you do have to find a way to capitalize the business. And
right,
and I think, I largely think that venture capital has done entrepreneurship a disservice and saying, oh, you don't need to worry about the revenue because investors will come along and fund your business. And the reality is that is not true for most companies and most startups. And I would even venture to say that most startups have a better shot at succeeding without venture capital because the entrepreneurs learn how to earn revenue. Venture capital is amazing at a growth stage of a business where the business is working and they just can grow faster rather than at the development stage of the business where you're still trying to figure out what the thing is that the market will pay for. And so, I would tell you that it's wildly energizing to be around that level of creativity, but it's also heartbreaking because founders are not quite coming to grips with the fact that maybe the idea that they have is not something that the market is interested in paying for, even if it's a great idea, right? And even if it solves a lot of problems, it's just not a viable business. And so I think balancing that, like as an investor and as a mentor, that's always been sort of my role, is really help focusing their energy and their creativity and what's the thing that you're passionate about, what's the thing that you can be creative about that actually has a viable business model on the other side of it.
And how do you, so, I work with startups around the world, primarily outside of the United States, because the United States is kind of a saturated market. And dealing with the topic of failure outside of the United States is really challenging because failure is not embraced in other countries the way that it is sort of accepted here. And so, and I know Techstars is global accelerator, incubator. I know that you guys have presence all over the world. How do you approach that topic of failure, which is so delicate, in certain cultures and, less so here? Like, how do you, like the way you explained it as heartbreaking is really one of the most poignant descriptions I've ever heard about working with startups. Nobody has ever said it that way. I mean, it was really beautiful. So, yeah, failure.
Yeah. It's interesting because when I think about the word heartbreaking, I don't, of course it's commensurate with failure, but that's not what I mean. What I mean is that it's heartbreaking to have such creative energy not go in the place where it's constructive. And when you have these dreams and watching those dreams get squashed or trampled on is the thing that's heartbreaking to me, more so than the business shutting down. The business shutting down is a symptom of the thing. Culturally, it's a real issue. I mean, there are clearly cultures that failure is unacceptable, and I think that those cultures make it much more difficult for entrepreneurs to succeed. However, what I would say is that as an entrepreneur, one of the beautiful things about entrepreneurs is that you get to engineer your world, right? You take something out of your mind and you make it a business. You are engineering your environment around you. You are hiring people. You are creating something out of nothing. And I think you can do that with the culture around you too. You don't need to be around people that are telling you that failure is bad. You don't need to be around people that are going to criticize you. You can engineer your own microculture around you to surround yourself with people that are rooting you on versus tearing you down. And that culture exists in the United States. There are communities where it is not okay to fail. There are communities where to take a step up is seen as bad, right? And I think it's up to the entrepreneur to leverage the very thing that they do to build a community of people around them that will help them succeed rather than tear them down. And I also think in that way, entrepreneurs can be leaders because they also help educate the broader community around them that failure isn't always bad. Failure is how we learn to take steps forward and how we learn to innovate. And failure isn't, failure is a step to success. Like, you got to fail before you succeed. You just do. Otherwise, you're just lucky,
Yeah, exactly.
And so they can be leaders. They can be cultural leaders in that way. And so rather than being a victim of a culture, they can be a leader of it and an engineer of it by surrounding themselves with people that will help them on that journey versus putting roadblocks up.
And on the topic of, failure and roadblocks. So, so the big thing now around the world, as you know, and as you've laid the foundation for, the whole thing is we want to start an entrepreneurial ecosystem right here in, call it Copenhagen. And we want it to be Boulder. We want to be like Boulder, or we want to be like Silicon Valley. Like, how do you, what are to those countries that are new, that are just kind of getting into the whole startup community? Like, what, you can't be Boulder. You have to be you, right? Like, how do you advise on that topic?
I think it's not something that you figure out overnight. I think authenticity involves learning who you are before you can authentically be you. And sometimes you have to look to other communities, or look, the reason that mentorship exists and the reason that mentors are powerful are because they've been there and done that and can advise on what their experiences have been. And so for a community that is looking to replicate what another community has done, the best thing that they can do is study those communities and figure out what worked for those communities and what didn't work for those communities. And then overlay on that the strengths and the weaknesses of their own community, and then do their own thing, right? You can't be the Bay Area. You can't be Boulder. You can't be New York, but you can take the best of what those communities did. You can also figure out what they didn't do well. I mean, I can point all kinds of things that Boulder didn't do well, and I can certainly point to a lot of things that the Bay Area is not doing well, that New York's not doing well, right? And you can say, okay, what are the strengths and the weaknesses there? What are the strengths and the weaknesses of our community? And then start to build up your own strategy and playbook that's right for you, right?
And how do you, just going back to your point about your father and you and, your journey, like, how do you advise entrepreneurs and startups, dreamers, poets, artists, creatives, whatever it might, musicians, how do you work with mentors? Because there's a sort of an underbelly to mentorship, and some startups are like, no, I can do this on my own, and I don't need any advice. Like, how do you approach that challenge?
Yeah, well, I think that any startup that thinks that they can do it on their own without any advice is correct. But I also think that the speed and the accuracy with which they accomplish their goals is going to vary widely. Mentorship isn't about following other people's directives. Mentorship is about hearing from people that have been there and done that, and then figuring out which of those experiences applies best to you and helping keep you out of making basic, simple mistakes that it's taken other people years to figure out. And you don't have to listen to everything a mentor says. Your job, the mentor's job in theory, is just to share their own experiences and what they learned or what mistakes that they made to help keep you from making those same mistakes. At the end of the day, as a founder, it's your company. You call the shots, you make the decisions. You don't have to follow what anybody else says. But when time and money are on the line, don't you want to do it faster? Don't you want to get there faster? Don't you want to avoid mistakes that you might not see because you're too close to it? Don't you want to hear opportunities that you might not understand because you didn't even know that was a thing?
Right.
And so I find that a founder that thinks that mentorship is invaluable is a founder that is listening to their ego alone. They care more about being right. They care more about them being right than finding the right path. And it's one of the reasons why I do what I do, is because those are not founders I want to work with, right? I've had mentors and I've had people say things to me where you walk away from the conversation going, of course, why didn't I think of that? Right? And I've also walked away from conversations like, wow, that person had absolutely no idea what they're talking about. And the beauty of that situation is that it's up to you, the founder, to filter that information and take the information that's most valuable and weave it into what you do. Right?
So I have tanked a few companies and I have had cash burn that is epic. And, I now I just write stories because it's the safer place for everybody. But my question is, when you are working in this historic moment of global pandemics, economic collapse, how do you coach these founders? Most of them are dreamers and most of them are eternally optimistic. Like, what is your message to these founders? Like, how do you coach them?
I mean, look, creative destruction is a thing. Like, most innovation is born in moments like this. This is the best time to be having your creative fire, burning, not the worst. And I get that the world is scary and I get that it's stressful and hard, but I also believe that whatever you focus on expands. And so if you focus on the scariness and the stress and the uncertainty of the future, then that will be the thing that defines you and defines your work and defines this era. But if you focus on what can you improve here, what opportunity is in front of you, what problem can you solve based on your unique skills and abilities, then you will find ways to leverage this into something awesome. I mean, look, like, I think we all agree that the events of today, from the pandemic to the riots to the inequality and racial injustice that's going on, are terrible things. But at the same time, they are forcing issues that on the other side will be better. And so you have to take a long view and go, how do I turn this into something that is constructive rather than destructive? And if you just focus on the destruction, then that's all that this will be for you. But if you focus on the creation that comes out of this and the positive stuff that comes out of it, then you win, right?
Yeah, I mean, and I totally agree with that. And I think if we look at, all right, so everybody's been working from home and we've had to really lean in and learn about technology and how to use technology. And so we're learning, making our way through this. And while we're doing that, the carbon footprint is it's shrinking, right? We've got, the environment is improving. Like there are some happy parts to this whole horror story that I think need to get told more frequently, instead of, like when you're on a motorcycle or a horse or anything in life, really, you go where you look. Right. And if you look at the burning pit of despair and, hope, loss of hope, that's where you're going to go. But if you look at like the potential of laying a new foundation and path for opportunity, I think it's really, really uplifting. And I know it's kind of a shit show out there right now, but I do think that there are a lot of opportunities. And you had something, I read your stuff on your blog, and your tagline really spoke to me. So you have on your tagline, so your website is almostnicole.com, right?
Nearly Nicole.com, but yes.
Nearly all, okay, close, I was close. So nearly Nicole.com. You said that your tagline is the picture of startups, investing, and life. And I just think, like, at this moment in history, and in time, it is a beautiful message. And I just wondered if you would kind of walk us through what that means.
Yeah, mean, I think like most, I've been struggling with the days, the quarters events. But I see a lot of similarities between what we do with startups and just living. And it's funny, like I read a lot, and I read a lot of business books. Obviously, I'm always trying to get better. And oftentimes, I think that the things that I'm reading are not business books; they're life books.
Yeah.
And the lessons that we learn, in running startups are about making us better humans. All, as far as I'm concerned, all the problems that we face are people problems, but they're not really people problems in the sense that it's other people problems. It's in the sense of it's my problem that I'm like projecting on other people because I'm the leader of this organization, and and everybody's following my lead, and like startups founders need to think that way. They need to think that all the problems that the company is going through are because of them. They are the cause. And so I think a lot about, just the like, I don't know, I'm one person. This is one Nicole. I don't have the work Nicole and the like mom Nicole and the wife Nicole and the friend Nicole. It's one person, and I carry that, my personality, through all of those situations. And so the things that I can learn that make me a better entrepreneur or a better leader are also things that will make me a better friend and a better parent and a better, spouse and all of the other things. So I think a lot about the bridges that are there, and how we can just live one life and it be our best life rather than just learning business skills that don't apply anywhere else. Right.
Yeah. Yeah, no, I agree. And I think that, not to sound like, we're on too much of a softer science kind of thing here, but the essence of a startup, the essence of a Fortune 500 company, the essence of your life will always take on who you are and what you stand for. And that is like, such a powerful thing to say, but a harder thing to put into practice, which I think is why your tagline really, like, it spoke to me. And all of you who are out there should go check out the blog, because it's got some really powerful, lots of outdoorsy photos.
I'm not super good at keeping it up to date, but I appreciate
nobody is. Nobody is, but it is a really good read and a very raw and authentic look at, life, business, philosophies, the essences that we're talking about. And I have a couple of other questions. Brock, I don't know if you want to open it up for, I don't think there's anything you and I can say that is more important than the questions from an international audience. And so maybe we bring them in and make them a part of the conversation. But if nobody pops in, I've got like 2,000 more.
Well, I was going to say there's one question that came up. I don't know if it came up for you guys, but it's showing in my chat window, which says, what are the generic mistakes that almost all startups do? And that's such a hard question to answer, because there are thousands of them, and we couldn't even write a book. It would be like the size of a Googleplex to like list out what those are. But I think that's the point of mentorship, is to find people that can help you figure out when you're potentially going to make a mistake before you make it, right? I would say one that I'm paying a lot of attention to right now, just in general, is the economic, I would call it the financial health of the business. I'm not kidding when I say that I think that venture capital kills most startups, because what happens is, as a founder, you end up focusing your energy on a VC and how to engineer your business to make your company interesting and attractive to a venture capitalist, rather than spending that same amount of energy in making your business attractive to a customer. And at the end of the day, the customer is the thing that makes your business successful, not the VC. And so when your energy is going into making it attractive to a VC, like you're building the wrong thing. And so VC has largely glamorized what it means to be an entrepreneur. And if I could make any sort of recommendation, it would be don't raise capital. just don't. And if you absolutely need capital to grow your business, then find another business, find another idea, pivot hard to figure out what it is that you can do to generate revenue. And then once you're generating revenue and you can make the business work without outside capital, that's the time to go raise, because your energy has been on the right thing, which is making your customers happy. And at the end of the day, the customers are the thing that are going to keep your business alive, not VCs. So anyway, that's something that's probably a really common mistake today. And then there's like thousands of others.
And I would like to ask another question, which we get frequently about from the startups. Techstars is the early stage investor. So how do you value the startups in different verticals in different countries?
How do we value the
valuation of the early stage companies?
So we don't value. We don't. The deal that we have when companies go through our accelerator program is a standard deal. We don't adjust that deal based on the stage or the market or the geo that the company is in. It's a very standard deal. And the reason for that is because most of the value that we provide back to the companies isn't in the form of cash. It is in the form of mentorship and platform support. And that mentorship and platform support adjusts based on the stage and the market and the geo that the company is in. So it adapts to the needs of the company, where a dollar doesn't adapt, right? A dollar is a pure dollar, and it's valued at a dollar, period. And so we don't do valuation. We leave that to other investors in later rounds to do that. And that's how we get around what the valuation exercise is.
So let me rephrase the probably question. So how do early stage startups value their companies while they're on the demo day?
They don't. The investor does. So remember something. Something costs what the market is willing to pay for it. You could invent the world's greatest car, and you could put a price tag on it. But if the market isn't willing to pay for that, you're going to adjust the price until the market is willing to pay. And so at the end of the day, the market sets the price for your company, not you. And so how startups value the business on demo day, the correct answer to that question is that they don't. The investors that are funding the business set the value. Mm-hmm. And because that's showing that that's what they're willing to pay, mm-hmm. And so, of course, entrepreneurs on occasion will say, well, this is what we want to raise at, and these are what our expectations are. And then sometimes the market agrees to those prices. But again, the agreement, it has to be bi-directional agreement. Otherwise, the startup, it doesn't mean anything. So usually what we counsel for startups is when you're raising your first round, and you don't get a term sheet if you have an investor that isn't leading the round and getting a term sheet, is that you go to the most influential investor that has committed capital and work with that individual on what they believe a fair price is, and then circulate that price with other investors. But if you go out and you say, I'm raising, $1 million on an 8 million pre or something like that, the investors don't buy. You don't really know why they're not buying. Are they not buying because of the price? Are they not buying because they don't believe in you? Or are they not buying because they don't believe in your business? Why are they not buying? And so it's better to let the investors set the price.
Mm-hmm. Also, from the Techstars perspective, you get all the deal flows, probably all the applications from your website, the application form, and you select them on the probably in a pipeline. And do you have an anti-portfolio or some of the startups that you haven't selected but became successful?
So is the question, do we study our anti-portfolio?
Yes. And do you have a list of it, and how did you miss them?
Yeah. We don't do this as well as we should. And so our programs are run by 50 individual managing directors. Some of the managing directors do track their individual anti-portfolios, and some do not. We don't do it at a company level, and it's something that we're looking to change. We do want to do it at a company level and understand who we're missing and why. So it's definitely room for improvement for us. I mean, I can talk about companies that I missed when I was running program, and I will tell you that one of the things as an investor, not even just as an investor, really as a human, back to my earlier point, is always trying to review past decisions to figure out what you got right and what you got wrong so you can improve your future decision making. And part of that involves recording what your sentiment was and what was going through your mind at the time that you made that decision. And so as me, Nicole, when I was running Techstars programs, I absolutely did that. I had like every single company that I ever considered in my top group. And unfortunately for me, I didn't record all the ones I didn't put in my top group. So I'm unaware of the winners that came out of that industry or came out of that subset. But I have my top group, and then of that top group, which ones I picked. And I missed some pretty big ones in there, right? But I can say that one of the companies that I missed in there, while I will protect the innocent in naming them, when I go back and look at it, I mean, for what it's worth, is a multi-million-dollar economic impact to me. If I had invested in that company, it would have been millions and millions of dollars to me. And but when I go back and I look at what I was thinking at the time, my words on it were like, this business will probably succeed, and I don't want 1 minute of my life energy going into helping the founders succeed at the business. And so I didn't like what they were doing, and I didn't like them. And so in retrospect, my LPs might disagree with me, but I am glad that I didn't invest in that company and if I lost it. But sure, I have lots that like I missed, and you just have to look at what you were thinking at the time and go, okay, how do I not make those mistakes in the future?
Mm-hmm. And we are passing through different times and special times, especially these economic turmoils, and also most of the countries are facing now difficult times in their economy. How do you give recommendations to startups to overcome and survive longer timeline in these hard days?
Yeah. Maybe again to my earlier point about just being a single person. I mean, this is true for us as individuals, not just companies. It's a greater responsibility as a company because you have people that are working for you. But I mean, it's really, really strong financials. And that means focusing on revenue, focusing on being in control of your destiny, making sure you have a strong balance sheet with money on the balance sheet that can sustain periods of time with like no revenue or low revenue. And that's hard to do at first, right? But if you stop and you think about for a minute all the crap that you spend money on inside your business, like we bought new chairs and we get everybody new computers every 3 months, and all of the stuff that you could survive without, and thinking about if that money were being saved on the balance sheet for a rainy day. And we have lots of different customers, not just one customer, right? Like lots of different revenue sources. Those are ways of strengthening your financial position. I don't think anybody could have seen what COVID did to us. And so clearly some markets got hit worse than others. I'm close to a company that was in the travel space, and their revenue tanked by about 99% in 14 days. Nobody could have saw that coming. But the best thing to do is have a really strong balance sheet, diversify as best as you can, make sure that you're protecting yourself from crazy outcomes, right?
There is another question from Mehmet. If some partners are dedicated for work while some partners are running other companies and just participating as a part-time in startup work, do you think that it could be a bad sign for investors?
I'm not sure I understand the question.
I mean, as far as I understand from his remarks, the team which is founding the startup, some of them are working full-time and some of them are part-time, and they're still in other business. And is it a bad sign for the investors?
I got it. So maybe just to restate the way that my brain interpreted it, which is if you've got multiple founders and only one or two of them are part-time and maybe one or two of them are full-time, does the investor see that as a bad sign? The answer to that question generally is yes. And there's a reason for that. I am giving you my money and I expect you to return it with interest. I mean, with it being bigger, right? If you have a side gig, not all of your energy is going into making my money grow. In addition to that, you have a safety net that's in place. If you don't have a safety net in place, you're going to work a lot harder to make sure that this is successful. You're going to be a lot less likely to bail if something goes wrong. And guess what? Stuff goes wrong in startups all the time. It is not a matter of if it goes wrong. It's a matter of when and what the magnitude of it is. And so I want to know that all of your work energy and all of your economics are wrapped up in the thing that you are doing for me. And if they're not, I'm just not as likely to invest. I've got 10 other things that I can look at where they're full-time and they don't have safety nets. So why would I put money into this? So absolutely, it's not a great sign.
Amy, do you have another questions? I have already listed the questions from our audience as well.
I mean, I could talk to Nicole for 5 days in a row without stopping. But I have a question about, leadership, especially leading through the crisis that we're in right now. Like when you're looking at investments in companies, like what are you looking for in leaders and founders? And sometimes they're not the same people. Like what are the characteristics?
I mean, that's a generic question that I'll answer generically. I mean, a lot of times it depends on the company and it depends on what that specific company needs, and it depends on the stage of the company. What a company needs and when it's at founding stage is very different than what it needs at 100 people, which is very different than what it needs at 100 people. And so but broadly, what I would say is, number one, I'm looking for radical intellectual honesty from the founders. I want founders that can go, wow, here's something that I suck at. And I need help figuring out how to create scaffolding and support inside of the business to make up for the fact that I suck at this, rather than a founder that's like, I got it all covered. Because they're either lying to me or they're lying to themselves. And both they're not quite equally bad, but they're bad. So intellectual honesty is a critical trait, I think, in identifying leaders that make great, I should say founders that make great leaders. Another thing that I look at is creativity. And the reason that I look for creativity is because, look, if there were a great playbook on how to run a successful company, like there wouldn't be the disparity or the difference between successful businesses and unsuccessful businesses. Everybody would be successful, right? So there isn't a great playbook out there. And what that means is you have to be wildly creative when you face challenges like COVID-19 and a global pandemic to figure out how you survive them. Because having a strong balance sheet alone is not the thing that's going to make you successful in those instances. The other thing I look for is execution. I can't tell you, like I was on a screening committee today where we're selecting companies to go through one of the Techstars programs, and there was not a single business in there that I hadn't heard before. I have heard almost every single idea, and I'm sort of at that place in my career where I'm a little bit cynical about it. I'm like, yep, I've heard that one 10,000 times. It's not the idea itself, it's the execution of the idea that matters. And so when you combine creativity with intellectual honesty with execution, then you've got a pretty solid winning leadership team.
And do you have an example of that combination of traits where you have the idea and creativity, intellectual honesty, and execution? Like, what's your favorite case of that from company?
You broke up a little at the end, but the question was if I had an example. Are you looking for names of people?
Yeah, or just names of companies, even companies that didn't. By the way, internet is getting a little sketchy, so I apologize. But just examples of companies who have done it right, like companies, any company. idea and creativity, intellectual honesty, and execution.
Yeah. I'm close to a company that's called Pana that's here based in Colorado. And I think that Devin and Sam are the two founders over there. They embody that. They're probably one of the best founding teams I've ever worked with. They have pivoted their business a number of times to really adapt to what the market demanded. And I think in some places people think pivoting is bad, but it's really not. It's identifying, it's learning and growing, figuring out what the true opportunity is, and then executing against that. And so when something's not working, they sit down, they get really creative, and then they execute against it to see if it works. And if it doesn't work, they sit down, they come up with new ideas, and then they execute against it. And they're also radically honest with themselves about what they're good at and what they're not. And they hold each other and themselves accountable to a very high standard. And it's something. It's a joy to work with them because I learn from it, right? And so maybe that one's a one to watch.
Interesting. Yeah, I saw that on your profile, the Pana thing, and I think also like looking at bigger case studies like Patagonia. I mean, and we're in Colorado, so we're a little bit earthy. And I'm wearing my pandemic hat. My hair looks so bad, but like looking at
gray.
Oh, you have no idea. But I think looking at bigger companies as well, there are a lot of lessons to learn. Like Patagonia has done so many beautiful things, not only with their products and with their messaging and with their, honestly, all of that, but also they've found a voice. I mean, but they're allowed to do that because they're Patagonia, and Yvon Chouinard is he's the voice of doing the right thing. And, I just think it's interesting, even for, a startup or an idea or, a very early stage company, to just look at some of these bigger companies that have really taken a product and turned it into, a machine. It's just really interesting. That wasn't a question. That was just talking again.
I actually think it's a great example. I mean, Patagonia wasn't always Patagonia. They started something, right? But the beautiful thing is that they were always Patagonia. The thing that makes Patagonia a leader in what they do is that they have been true to who they are since day one. And they lead from a place of authenticity and value rather than just purely profit. Right. And while profit is radically important, but when you lead with your values and you hold true to them all the way through, you will attract to you customers that believe in the same things that you do. Yeah. And that is what made Patagonia Patagonia, because when they started, the stuff that they were doing was wildly unpopular. Right. And at least to the business world, because you're like doing what you're using recycled material, you're using recycled plastic bottles to make your clothes. Like, use recycled plastic bottles in their clothes. That's terrible, but that was his values, and that shows all the way through what they do. And so that's what I mean is studying other mentors and studying other companies and studying other examples of what you want to be, and then finding out who you are and staying true to it. You will attract people to you, that customers as well, right? Customers and employees and all of the things that share that same value set. And that's the thing that alone can make you successful.
Yeah. I mean, I have no problem dropping $525 for a shell for skiing. Their messaging just worked. Or maybe I'm a sucker. I don't know. Either way, they're making money off of me.
Yeah. Nicole, thank you very much. Amy, thank you very much for this wonderful fireside chat and conversation. We are very happy to host you today at Startup Istanbul event online. And Nicole, hope to welcome you face-to-face physically in Istanbul with Amy whenever this outbreak completed.
I'm happy to help, and I wish the best to everybody that's in Istanbul, and I'd love to see your startup. So go crush it.
Thank you. Thank you very much. Have a great day.